So last night, CPI came out. I'm in Thailand, that's why it came out at nighttime. But we can see that CPI came in at 2.5% over the last 12 months in August, and that's down from that 2.9% increase in July. So it's the lowest reading since 2021. The thing that's stumping a lot of analysts and investors is that core CPI came in at 0.3% expected versus the 0.2% previous. So while inflation is coming down year over year, there are certain factors that are raising the inflation rates at the core level because it excludes things like food and gas that are more volatile. But from what I'm reading, primarily this is higher because of stubborn rent prices. While gas and food and other items are staying more flat or neutral stagnant, rent prices are slowly trickling higher. Initially, I thought because of the super low 2.5% CPI reading that the Fed would be cutting 50 basis points, but now that I'm seeing that core CPI is actually going up, it looks more likely that the Fed is going to cut rates by 25 basis points as the market is pricing in an 87% chance of that, versus only a 13% chance now of a 50 basis point cut. So what does this mean for the markets as a whole? Well, I'm going to get into that in a second. A really interesting data point that I saw from Ryan Dietrich, the last time that the S&P 500 was down 1.5% but finished up 1% was the exact lows marked in the bear market of October of 2022. If we look at the bear market from October of 2022, when we saw this massive run up, this was that day, October 13th, when we had this huge bullish engulfing candle on the daily chart. Now, when we look at QQQ today, we were down 1.5% and moved up 1% to end the day. So just a super interesting data point to note. He says that looking at previous big reversal days like this shows better than average returns across the board. As you can see, every time this signal came into play, we saw pretty high returns 1 month, 3 months, 6 months, and 12 months afterwards. One thing that I have been doing quite heavily on this sell-off that we've been having over the last couple of weeks is adding QQQ. Why did I think that, and why have I been calling for upside moves on QQQ and NQ on X? Well, this is the NQ chart. We have this very obvious daily fair value gap with equal highs right below it and tons of equal highs above this daily gap. My inclination is that we are going to go and retest this daily gap relatively soon. And so when we've had these major swings to the downside, it's been opportunities for me to add. I've been calling this in our community. If you want to join, there will be a link in the description below. But when we are in these crazy interest cutting environments, when people are trying to predict when the stock market is going to crash, it's important to note that in history, oftentimes in these types of environments, it's very difficult to time the top. Sometimes we make new all-time highs. Sometimes we consolidate right before highs are taken. But to me, this is a very obvious liquidity point that I think the markets are going to head to before we make a downside move. We could even potentially make new all-time highs. I'm not going to try and predict that, but I will take profits when QQQ gets to my target. If you're wondering what that equates to on QQQ, it's more around this 484 to 490 level. You also have to realize that tons of people who are short QQQ right now have their stop loss above this internal high. So I think that that is the primary draw on liquidity, which is at 45 and 54 cents. So just to wrap up, there's a lot of crazy things happening in the market. Obviously, CPI is coming down, but core CPI is slightly increasing. I said that the prices of food and gas are slowly starting to trickle or stay neutral, but rent prices are actually increasing, which is causing that core CPI to go up higher. One other interesting thing to note that I saw was that a big portion of the CPI reading coming in lower had to do with the cost of oil dropping. The cost of a barrel was about $85 in July, and it's moved down to closer to $65 currently. So one opportunity I think is going to be lucrative in the market for a long-term hold is going to be Occidental Petroleum. If you guys don't know about this stock, it is one of Buffett's holdings. I believe he owns about 30% of the company right now. It's maybe more like 28.5, but very, very close. This is something I have been eyeing for a very long time to add to a long-term portfolio. It pays a consistent dividend. Buffett is a big holder, and he's made some pretty big buys in the 55 to 60 range. So right now is potentially an opportunity for you to get the stock at a lower cost basis than Buffett currently has, which is a pretty good thing in my opinion. But personally, I'm looking to make my largest adds here at the 3-month mean threshold of this fair value gap. What does that mean? Well, we have this big fair value gap that formed on this green candle, and the mean threshold just means the 50% level of this. If you draw a line from the high of the fair value gap to the low, the 50% level comes out to $43.64 a share. So I will be making my largest adds in between $45 and $43. That will be a long-term hold. Last but not least, something that I am crazy bullish on right now. If you recognize this photo, I did post it on X, but I think that Bitcoin is about to have the run that we are all waiting for. We've had this massive consolidation waiting for the elections to occur. And as you might remember from my X post, I talked about this chart right here relating to what happens with cryptocurrencies right after the elections. If you see the green and the blue line represent the elections from 2016 and 2020. After the elections, we had massive runs on Bitcoin. And right now we are consolidating going into this election from November. So it seems likely to me that once the elections have occurred, after this halving has occurred, I think that we are more likely to see the huge run on Bitcoin afterwards. But it looks like we are setting up nicely for a run right now. We traded down into the 25% quartile of this daily wick. And now we've had this very bullish reaction reaction, and we inversed this daily fair value gap. We retested the bullish fair value gap that came out of it, and now I think we are very likely to run up to all these internal highs. Specifically, the 65,103 will be my first target, and if we actually end up getting to that point, I think that the reality is that we're very likely to move back to all-time highs. If you want to learn some of my strategies, you can follow me on X, where I post basically every single day. I hope you guys learned something from this video, and best of luck with your trading for the rest of the week.